Hello, thank you for joining us today. With me, I have Tracy Johnson, who is at the bank, and she's a professional that works in helping customers identify their home ownership dreams and opportunities. Tracy's been in residential real estate financing for the last 12 years. So, welcome, Tracy. Thank you for joining us. How are you today?
You. I am great. How are you today, Jonathan?
Good, good.
Good.
Tracy, why don't you give us a little flavor of what you plan to share with us today?
All right. Well, today the hope is that we're going to calm everybody's nerves, the people that's interested in starting the home buying process in terms of the mortgage lending uh, uh, pieces. So a lot of people become nervous, they're sweating, and they're just wondering, oh my gosh, am I going to be approved, or what's going to happen? And they really don't know where to begin. And so what we're here to do today is to bring clarity to that process and hopefully just kind of calm you down a little bit.
Well, I think this sounds like great information. So, let's go ahead and get started.
All right. Understanding the mortgage process. Next. So, our first step is to get pre qualified. And the purpose is to know how much you can buy. You do not want to start looking for a house before you know how much you're, pre-qualified for. So this will allow you to know whether or not you're ready, or if you need to just kind of start working on some things to prepare for your big purchase. So it's very important not to set yourself up um, for disappointment. Really, whenever you start looking for a house before getting pre-qualified, sometimes you choose a house that's not within the scope of the ratios that's required, where you can't exceed a certain ratio. Like example, maybe you cannot exceed 50%. But the house that you're looking at before going through this beginning stages will actually set you over that, which means we would not be able to get you approved. So you may have to, in when you first get started with the pre-qualification stages, you might find that you'll have to pay off some things, to decrease your debt, and then you may have to just start looking at ways to increase your income. Okay, next. So the process begins by completing a uniform residential loan application. And with this process, be prepared to provide a minimum of 2 years residential history and a minimum of 2 years employment history. The income is needed to be able to determine what you qualify for. Assets, this is savings, checking, CDs, money markets, retirement accounts that you can actually access in the event of hardship, 401ks, investments. Those assets can help you with getting pre-qualified. We need your liabilities, so we need to know what debt you actually have, the court order, child support, separate maintenance. All of that is important in the pieces, to determine whether or not you will qualify. And if by chance you currently own any form of property, air property, just raw land, that is a part of it, because we're going to factor in taxes and insurance. So that's counted towards your debt. And then there's the declaration questions that it's letters A through M that you have to answer yes and no to. And then there's the government monitoring questions that's asked, and it's just dealing with your ethnicity, race, and sex.
So
Okay.
Tracy,
Yes, sir.
tie this together because you've said a lot in a very few words.
Mhm.
Ratios, pre-qualification, all of these documents. What are we trying to string together? And what do the ratios mean?
So with the ratios, we'll be looking at your minimum payments, things that's being reported on your credit report. And so not you may pay $100 a month, but on this particular credit card, the minimum payment is $25 a month. So we're going to look at the minimum payments of everything that's being reported on your credit report. We're going to add that in addition to your new mortgage payment. And then we're going to divide it by your gross monthly income, which is the income before taxes. And that will give us the ratio to let us know whether or not you can afford it, or if you need to actually come down a little bit and reduce the the purchase price, should I say, because that can again be a deal breaker. If you're shooting too high, you may need to come down just a little bit in terms of your purchase.
And all of this should happen after I find a realtor or before?
You need to do this first. It's very important to do this first. Very. I can't stress it enough.
Okay.
All right. So you're going to be prepared to provide the different documents. So some of the documents here, as an example: driver's license, social security card, your most recent 30-day pay stubs, your most recent W-2s and complete tax returns, 2 months, recent bank statements, checking, savings, the CDs, the money markets, as I mentioned earlier, the quarterly statement for retirement and 401k and investments. And then there's even the whole life insurance. So you may have that particular policy that will allow net cash value, and you could use that as well in terms of assets. And so we would need a copy of the most recent quarterly statement for that. Next. Okay, so second step, now that you're pre-qualified, we're assuming that we've checked all the boxes there, and we have presented you with your letter stating how much you are pre-qualified for. This is what your realtor will be asking for. So now it is time to actually start, seeking that realtor that you feel will work best, for you and will work, best on your behalf. They want the letter. And so you're going to present them with the letter stating how much you've been pre-qualified for. And at this time, you should not be making any major purchases. Don't jump ahead of yourself and start, shopping for furniture and all of that. That you need to wait. Put that on the end. Let's stay focused with the process. And that is, trying to find a house. And so the realtor will actually start sending you a list of properties. But I think I've jumped a little bit too far. This is very important. Know that you will need a down payment. You have, 3.5%, 5% down. Some people choose to put 20% down. Whatever it is, the money needs to be sitting in your bank account, whatever account out of those things that I mentioned in terms of assets. We need to be able to show that it's been there for 60 days, a minimum of 60 days. This is called seasoned funds. And that's very important, because if it has not been sitting there for 60 days, we will not be able to use it for your assets in terms of down payment.
Next. What about down payment assistance programs?
Down payment assistance programs will definitely help you. You will have to have some form of money to contribute, even with down payment assistance programs. So some people believe that if they are able to qualify for the down payment assistance programs, that they won't need any money out of pocket. But sometimes you have to have maybe $500, just something. You need to make sure that you go through all of this with your loan officer and get a clear understanding in terms of the down payment assistance programs. And then you can also, you may have a family that want to help you with the transaction. That can be a part of the assets as well, being used to make your purchase.
Okay, so the big takeaways from this step is to have the pre-qualification letter, find the realtor, no big purchases, no timeshare, no furniture, no cars during the application process, and we will need funds.
Definitely. And I'm so glad you brought up cars. I mean, this is one of the biggest mistakes that people make. They go and they know that they want to purchase a home, but they actually start shopping for a car before they finish the home buying process. And remember, we talked about debt ratio. Well, you can definitely, cause problems for yourself by adding on additional debt, being a car payment. And really, you may not qualify for that home that you wanted to qualify for, and you could have qualified for if you did not make that purchase, before buying your home.
Okay. All right. So what's next, Tracy?
All right, third step. So we're searching for that house, right? So the realtor, as I mentioned, will send you a list of houses based on the range that you are qualified, pre-qualified for. And so from there, you want to make sure that you take into consideration, based on your comfort level, like the neighborhood. You want to make certainly sure that you drive maybe in the day time, at night time, in that particular area. If it's a home that you really, really, really believe this could be it for me. You want to know, you want to just check the environment and really feel good, about that particular area before you just, make that decision that you're going to place an offer on the house. Also, be mindful of your commute time, traveling back and forth from work, and school. And then, if you have kids, you definitely want to consider the schools in the area as well. So those are some things that you need to think about when you're searching for that house. Next. So the fourth step, now that you found it, you're satisfied, you're comfortable. Now it's time to present that offer on the home. And so this is when the realtor will actually draw up that legal contract. He or she will have you to sign it. And then they're going to present that particular contract to the what we call the listing agent or realtor that's representing the seller. And so we're going to assume that the seller did accept your offer. And here it is. Let the fun begin. So you or your realtor will send the contract to the loan officer to get started with the process. Yes.
Okay. So Tracy, once the fun begins, that's it. We're finished with the process.
Oh no.
Okay.
Oh no. We're just getting started.
Got it. Got it. And just for those out there participating, please, if you have any questions, don't hesitate to share it in the chat. We have individuals standing by, waiting to help answer some of those questions, and we will also be answering them online. And thank you to those who have already shared their questions.
Absolutely. Fifth step, sign your early disclosures. This is your intent to proceed. And so the disclosures that the loan officer will provide to you are loan estimates, and it also provides you with information in terms of the type of loan program that you are approved for, whether it's conventional or FHA, VA, whatever it is. That will be stated in your loan estimate and early disclosures. And you will also see in the loan estimate the estimated out of pocket cost. So that means at closing. Now, it's not the final number. Remember, it's estimated. It just gives you an idea as to how much money you'll need to bring to closing. So once you sign your early disclosures, this means, again, that you now intend to proceed with this process. And so the bank will collect a fee from you for the appraisal order, and then we'll order the title report from the chosen title company that you or your realtor have selected, and you agreed with your realtor, yes, I want to use ABC Title Company. Next, sixth step, the appraisal is complete. And so now we will go ahead and lock your interest rate. If you did not lock your interest rate in an earlier process, like when we first disclose the file to you. So the appraiser completes the appraisal and submit it to the bank. The appraisal will provide to us the estimated, well, I shouldn't say estimated, the value based on today's time in terms of the different properties that he's actually used in comparison with the property that you're purchasing. So he is actually sharing with you the value of that particular property. And so we will not finance more than what the property is worth. So it will either be whatever is less, the sales price or the appraised value, whichever is less. And I know we are now in a time where people are paying more for homes, than what it's worth because it's a competitive field. But that will be your expense. The bank will only finance the appraised value or the sales price, whichever is less. Slide. All right. Seventh step, processor and underwriting. The file will move to the underwriter for a conditional approval. We're going to assume that everything looked good and we've made it this far. So once the file receives the conditional approval, you and your loan officer will work to address any concerns or questions of the underwriter. So your file, once we've addressed all of those concerns, then your file will actually go back to the underwriter to receive a final approval and clear to close. And mind you, you definitely want to hear the word clear to close. This is it. It's time to actually move to the next phase. You can breathe, but when you're breathing, don't start spending any money. Let's hold out. Let's wait. Forget the furniture right now. Let's wait. Okay. Next, thank you. Eighth step. So closer sends initial closing disclosure. You will receive an initial closing disclosure from the closer. You will sign the closing disclosure, and the closer will start working with the title company to prepare your documents for your big day. The closing date and time is scheduled with the title company. Your final closing disclosure is received. You get your certified cashier's check from the bank made payable to the title company. So the initial closing disclosure provides you the estimated amount that you will actually need to bring to closing, but it's not the final figure. It's just the initial. This is required. You have to receive this 3 days before you actually close on your loan. So then when I indicated on down further that you'll receive your final closing disclosure, that is the gospel. That is the number, the figure that you actually need to bring to the title company. And so, yes, you will go to your bank to get an official certified check, cashier's check, to take to the title company. What? Ninth step. It's closing day. Woohoo! Your realtor or agent, seller's agent, and seller will go to the title company to complete the transaction of the sale and make you an official home owner. See that picture? It says home sold. You got your keys, and it's time. It's time. Let's go on and get your furniture, whatever it is you need to do. Let's make that happen now because it's a done deal. Next. All
right. Well, Tracy, can you spend a little more time explaining generally down payment assistance programs, how they work, and generally what they offer, whether or not they also cover closing cost assistance?
Yeah. So the down payment assistance programs, there's quite a few of them out there, and they can work differently. There's grants where you don't have to pay this money back. And then they have what's called the soft second. It's like a second mortgage, but even though it's a second mortgage, you're not making any payments for most of them that I've seen. You don't have to make payments unless you um, kind of change up the agreement, like that you have to sign a document stating that you will actually stay in that particular home for sometimes 3 years, sometimes 10 years. And if you choose to move out of the home or refinance, sometimes you have to pay that money back. So it depends on the program. Some programs will they have a set figure, where they will actually give you $10,000 towards your home purchase. They may give you 30,000 towards your home purchase. Some may just offer 2%, 3%, 5% down payment assistance, and then again, most of them want you to still, participate in this and have what they call skin in the game. And so you do need to make certainly sure that you still have money, ready to help support the transaction. Again, it could be $500, it could be 100. It just depends on the program, and that is the information that your loan officer will provide to you once they've had an opportunity to work, work your file. Now, the down payment assistance programs are typically based on your income, and so there's different income requirements. There's some programs that's geared strictly towards first-time home buyers, and then there's other programs that will offer assistance even if you're not a first-time home buyer. And so it really depends on the program.
So it sounds like the mortgage consultant or the loan officer you're working with will be pivotal in helping you understand what's available in your area.
Absolutely.
So can you tell us a little bit more about general qualifications, credit score, the ratios that you talked about earlier? What are some of the general qualifications someone can look at or prepare themselves to have in order to achieve their home ownership dreams?
Okay. Um, what I would say is first, a lot of people do not realize that when we are looking at your credit, we use your middle score. And, some people may say, well, what does that mean? Well, there's TransUnion, there's Equifax, and there's Experian. So out of the three, one will have a higher score than the other two, and then one will have a lower score than the other two, and then there's one that will actually be sitting in the middle. And so that's what we mean when we say we're going to use your middle score. Now, if there's two people on the loan, then we're going to use the lowest middle score. So, each person will have, normally will have three scores, and but we're going to use the lowest middle score out of the two bars. And I apologize, Jonathan, what was the other question?
The other part of it is just generally what should a customer have, or what is the general range for the score and the ratios that you talked about earlier for someone to qualify?
Okay. All right. Now, my suggestion, I always share, is to try to have a middle score of at least 620. Um, 640 is great, but you can have a lower score to qualify, and it just depends on the program. It can be lower than the 620. There are other things that come into play with that, though, meaning you definitely need to have money in the bank because you will not qualify for down payment assistance. To qualify for down payment assistance, typically you want to have a 640 credit score. Okay. In terms of your debt ratio, you really want to try to stay within a 43% debt ratio range. However, you can go higher, but there may be compensating factors that play along with this to go higher. So it can be 43, 45, and you can go, higher than that. You can go as high as 50%. But there are things that will have to come into play to bring that together. And the time frame on the job will play a role as far as compensating factors and reserves in the bank, meaning they may want you to show that you have 30 days, 60 days house note payment sitting in your bank account after your down payment and closing costs. And that's just basically it's knowing that in the event life happened, like COVID happened to a lot of us, and want to make certainly sure that you can still pay your bills in the event of some form of hardship when you are allowed to exceed the normal debt ratios that's normally set in place in terms of the guidelines.
If the credit score is in that range, does the bank also look at payment history for creditors?
The bank will look at your overall credit history, period. That is definitely a part of qualifying your overall. So you would want to make certainly sure that you can show at least a 12-month good payment history when you are actually, in this process to hopefully receive a favorable outcome. That's going to be very important to be able to show a minimum of a 12-month good pay history overall.
Okay. And so the last question, because I see we're running up on time, is it better to rent or buy?
Wow. It's definitely better to buy. I'm seeing things on the news where they're constantly talking about rent is going up for people, about 30% higher than previously. When you're renting, you have nothing to show for it. Literally, it's like you're putting your money in a trash bag, maybe that has a hole and it's just falling out, or in a trash can. But when you're buying your home, you are actually investing in yourself, in your family, and you're building equity. But yet, you're also you can say that you will have stable payments, monthly payments. The only thing that will change in terms of your payments on a mortgage is insurance, homeowners insurance, and taxes. Those things can change. But the principal and interest payments, if you are in a fixed rate loan, will not change. And so you can kind of control that, but you cannot control the rent payments. So just being able to have that steady payment, and also investing in yourself and creating that's the beginning of wealth. Starting that for your family is crucial. So it is definitely better to buy.
Okay, we have one more question in the chat, Tracy, and I promise we'll wrap it up.
Okay.
Will the bank pull your credit score again before closing?
Oh, that's a very good question. The answer is yes. So just like I said, don't go out there and and start spending wild. Don't go out there applying for other things, either credit cards and all of that, because yes, the bank will definitely pull your credit report again. It'll be considered like a soft pull, but we to see everything. This is something that the underwriter will do right before he or she says clear to close. So please, please, please don't do anything to sabotage your approval.
And are gift funds allowed?
Oh, yes. Gift funds are definitely allowed.
Excellent. Well, Tracy, if anyone has any other questions, how can they reach you?
Please give me a call at 318-840-0356, or you can email me at tmjohnson@libertybank.net.
Thank you, Tracy. I really appreciate that. Can you give it to us one more time?
Absolutely. 318-840-0356. Email address is tmjohnson@libertybank.net.
I want to thank you, Tracy, for agreeing to participate today. You shared a lot of golden nuggets that I think everyone will be able to use to start on purchasing a home. And I want to thank everyone for joining us today for this information, and we hope to see you soon. Have a good one.
Bye-bye.